welcome back to Global Value. In today's video, we're going to be performing a fundamental stock analysis of US Bancorp, ticker symbol USB. US Bank is a position in the Berkshire Hathaway public stock portfolio. Berkshire currently owns about 8.5% of the company, and although US Bank is a top 10 position in Berkshire's portfolio, it only makes up a little under 2% of the portfolio overall. US Bank is also a part of the Daily Journal portfolio. It's also in Chris Davis's portfolio, who's a relatively recent addition to the Berkshire Hathaway board. On the day I'm recording this video, US Bank is trading at $46.50 per share. They had their second quarter earnings call today, where they reported a little under what was the expected earnings per share, but they beat on revenues. And overall, their stock price has been up 5% today. So those are very short-term things. We don't want to put a lot of stock in them, but as those were in the news recently, just wanted to highlight them. Even with today's increase in their stock price, year-to-date, US Bank's stock price is down 17%. Going back over the past year, their stock price is down 18%. Since COVID, their stock price is down 5% compounded annually. However, over the past 10 years, they're up 3.5% compounded annually. And going back prior to the global financial crisis, US Bank is up only 2.5% compounded annually. So a lackluster return here, but keep in mind that this is not including the dividends that the company pays out. And this overall return was coming from a high base leading up to the crisis. If you would have been a buyer of US Bank at some of these lows during 2009 or in spring of 2020, you'd be doing quite well right now. So prior to their earnings, US Bank was trading at their 52-week low, which is down about $20 from their 52-week high. US Bank is a large bank. They have a market cap of over $65.5 billion. For some background about the business, as a diversified financial services provider, US Bancorp is one of the nation's largest regional banks with branches in well over 20 states, primarily in the western and midwestern United States. The bank offers many services, including retail banking, commercial banking, trust and wealth services, credit cards, mortgages, and other payment capabilities. As of December of last year, the company provided its products and services through a network of over 2,230 banking offices, as well as through online services, mobile apps, and other distribution channels. It also operates a network of over 4,000 ATMs. The company was founded in 1863 and is headquartered in Minneapolis, Minnesota. For today's fundamental analysis of US Bank, we're going to be performing our very own new 10 Towers banking stock analysis. This 10 Towers stock analysis came about as a result of me not being able to find a holistic and beginning stock analysis process that would work at evaluating banks based off key banking metrics. So taking inspiration from Everything Money and using the outline of the 8 pillars, I've modified that to expand it to 10 Towers based on my own research into banks. So props to Everything Money for the inspiration. As a disclaimer, this video is about learning in public. The hope is to keep making this analysis better and better over time. If you have any suggestions or any improvements to this analysis process, please leave them down below in the comments. I'd love to hear your advice. So with that introduction, let's get right into our analysis. Starting off with tower number 1, we want US Bank's average 5-year PE to be below 12.5 to be trading in line with bank's historical averages. So currently, US Bank is trading for 10 times earnings. Over this 5-year time frame, US Bank has gone up to about 19 times earnings and all the way down to 7 times earnings during March of 2020. However, averaged out, US Bank is trading at about 13 times earnings, so just over that metric we were looking for. And unfortunately, that's going to be an X to start off on tower number 1. Tower number 2, we want their average 5-year return on equity to be above 9%. US Bank does a good job here. They've earned returns on equities that have been above 9% in all 5 of these years, which is really saying something. A hallmark of a great bank is that even during the worst years, they're still able to earn respectable returns on equity, and US Bank has been able to do that. During 2020, when a lot of other banks got hammered, US Bank still was able to deliver returns on equity above the metric we were looking for. So averaged out, US Bank is earning returns on equities in the low teens, and that is going to be our first check on tower number 2. US Bank delivers a strong performance here. Tower number 3, we're looking for 5-year revenue growth. US Bank has grown revenues from just under $20 billion in 2017 to over $23.5 billion in 2021. That's a check on tower number 3. Tower number 4, we're looking for 5-year net income growth. Net income, also known as earnings, are ultimately how banks are going to be valued because a free cash flow analysis is just not going to work for a bank. So we want to see growth here. Importantly, US Bank has grown their earnings from about $6.2 billion in 2017 all the way up to just under $8 billion in 2021. So that's a check there on tower number 4. Averaged out over this time frame, US Bank is earning about $6.6 billion per year. Put that in the bank for now. We're going to come back to that later on in the analysis, but that's a check on tower number 4. Tower number 5, we're looking for 5-year deposit growth. Banks make money based on the spread between the interest that they pay on deposits versus the interest that they're able to make lending out their deposits in the form of loans, mortgages, etc. So US Bank has grown their deposits from $347 billion in 2017 all the way to $456 billion in 2021. So US Bank has nearly $500 billion of deposits. That is a check on tower number 5. Tower number 6, we're looking for decreasing shares outstanding. When you purchase a share of stock, what you're really buying is an underlying fractional ownership percentage in a business. When a business decreases the number of shares outstanding, they're increasing your ownership of that business, ultimately meaning that you're going to be entitled to a higher percentage of the business's profits without you having to spend any money. So we want businesses that are buying back shares at reasonable valuations. Over this time frame, US Bank has decreased their shares outstanding from just under 1.7 billion shares outstanding in 2017 down to about 1.5 billion shares outstanding in 2021. So that is a check here on tower number 6. Towers number 5 and 6, both being checks, are a very important metric for a bank. It signals that they have high deposit per share growth. And again, that is one of these hallmarks of being a great bank. So far, US Bank is doing very well. They have 5 out of 6 checks. Let's keep going. Tower number 7, we want the interest that they're paying on deposits as a percentage of their total deposits to be stable or decreasing. So again, banks are earning money based on the spread between what they pay out on interest versus the money that they're able to take in on loans. So being able to pay a small amount of interest on total deposits relative to its peers is going to help a bank have a low-cost producer advantage in this commodity business. So over this time frame, we've seen deposits go up and the interest on deposits go down. So that's a check on tower number 7. Keep in mind that the interest that a bank is going to be paying out on deposits is going to fluctuate with the federal funds rate, not necessarily one-to-one. Typically, banks are going to have to be competitive relative to their peers. Tower number 8, we want their non-interest expenses as a percentage of their total deposits to be stable or decreasing. This tower is going to help us understand how efficiently a bank is operated. Per dollar of deposits, we want their non-interest expenses to be going down. That'll help signal to us whether or not the bank is being operated more efficiently over time. So over this time frame, again, total deposits are going up. And here, non-interest expenses also increased, so we're going to have to do some math. In 2017, non-interest expenses were approximately 3.6% of total deposits, and that decreased in 2021. Non-interest expenses were only 2.9% of total deposits. So overall, US Bank is operating more efficiently now than they were 5 years ago. That's a check, and that's another sign of a strong banking franchise. Next up, tower number 9, we want institutional deposits as a percentage of total deposits to be stable or decreasing. Ideally, we want this number to be as close to 0 as possible. This tower is going to be a banking safety metric. It's focused on the overall safety and health of their deposit base. The reason for this is that it's harder for sums of money that are retail funded to be quickly withdrawn from a bank versus blocks of money that are institutionally funded. Plus, it's lower exposure to other institutions overall. So over this time frame, institutional deposits have gone down and deposits have gone up. So that's a check on tower number 9. In 2021, US Bank's deposit base was 2.4% institutionally funded. So again, we want that as close to 0 as possible. 2.4% is not that bad. This is likely another sign of safety here. Last but not least for our 10 towers analysis, tower number 10, we want US Bank's market cap to be below their average 5-year net income multiplied by 10. This will help to give us a starting point as to a reasonable valuation of what we should be paying for US Bank, keeping in mind, as Warren Buffett himself has said, that earnings are the key to valuing a bank. US Bank currently has a market cap of over $65.5 billion. When we multiply their average 5-year net income of $6.6 billion times 10, that brings us to $66 billion. So that is going to be a check here on tower number 10. It looks like there's under $1 billion of margin of safety here for US Bank. Just because this tower is a check doesn't mean that you should automatically run out and buy US Bank. This 10 towers analysis, similar to the 8 pillars analysis, is a holistic starting point of determining whether it's worth your while to learn more about US Bank and do further research. This type of analysis is not financial advice, and it should not be misconstrued as either a buy or sell recommendation of US Bank. Banks as financial institutions are going to have a different set of financial risk, and over time you're going to see certain financial chicanery in these publicly listed financial institutions. In order to invest in a bank or any other business, you really have to be an expert, and if you're considering investing in US Bank, you really have to understand that business inside and out as if you own 100% of the business. Lastly, many people are interested in banks because they tend to pay out relatively high dividends compared to the overall market. Currently, US Bank has a 3.5% dividend yield, which is well above what the S&P 500 is currently yielding. However, people make mistakes all the time by blindly chasing dividend yield. Instead, if dividends are part of your reason for potentially looking at a business, you need to look at the business's dividend profile and understand if that company's dividends are healthy and supported by their earnings and free cash flow. Here, because US Bank is a bank, we're looking at how their earnings compared to their dividends. Other businesses, you want to look at how their cash flows compared to dividends. But depending on the type of business, these comparisons are going to give you the same general results. US Bank has increased their dividends per share in each of these 5 years. At the same time, they've kept their payout ratio below that 60% threshold that we'd like to see. Their highest payout ratio came in 2020, which was 57.5%. A dividend payout ratio is very simply what percentage of earnings are being paid out as dividends. Last year, they only paid out 36% of earnings as dividends. Based on this, US Bank has both been buying back shares and paying out increasing dividends each year. Over this time frame, they've had plenty of earnings to be able to support this dividend. Banks, just like any other business, are going to have their own business cycles. And so while based on this snapshot of the past, it looks like their dividend is in good shape, potentially is subject to change into the future, this is just another reason why it's important to really be able to understand a business inside and out. But overall, based on these last 5 years, US Bank looks like it has a pretty healthy dividend, and they're paying out that nice 3.5% dividend yield. So in summary, US Bancorp checks the box on 9 out of our 10 towers. They're only very slightly off on our historical PE metric, but overall it looks like US Bank is currently trading at about a fair value. US Bank has produced above average returns on equity, and they were able to keep producing above average returns on equity even during the significant downturn caused by the COVID pandemic in 2020. Over the past 5 years, they've grown revenues, they've grown their net income, they've increased their deposits per share, their interest expense as a percentage of their overall deposit base has decreased, the bank is operating more efficiently, and they've decreased the amount of institutional funding that they have in their deposit base. Based on all these metrics, it's no wonder that Warren Buffett, Charlie Munger, and Chris Davis all like US Bank, and they all hold it in their portfolios. Based on this analysis, it looks like US Bank is a very well-run banking franchise that's currently about fairly valued. Again, this type of analysis is a holistic starting point. It's not financial advice. And ultimately, as an investor, it's up to you to learn more about the business. To learn more about US Bank, I highly recommend checking out their filings, dive into their 10K, and read through their annual report to get a better sense of the business overall. That's it for today's 10 Towers fundamental stock analysis of US Bancorp, ticker symbol USB. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at, bank or otherwise. Thanks for learning about US Bank with me, and have a great day.